Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical market analysis where we look at the charts and try to understand what happened in the market during the day and plan for a better trade for the upcoming trading day. That's tomorrow, May 10th, Friday, 2024. So we had another big sell-off today. Bears tightened the group and market is at very crucial levels in the short term. Let's try to understand more. We'll come back here to the slides after we have a look at the charts. So here we have the Nifty charts. We'll first see the plain candlestick. No doubt that this is very bearish and it's a big fall, right? 345 points in single day. It's 1.55% loss in a single day, wide range bearish candle, and it's the 7th day of downfall from the top all-time highs. This is Banknifty's charts. Here also we have a wide range bearish candle, and it's the 7th day from the very top. Clear bearishness, and if you put the channels, we could see that it's at the very bottom of that trend line channel, and it was trending down since from the top of the channel, and now it has reached exactly at the bottom of the channel. So any breach or tomorrow's candle close will be very crucial because of the fact that it would indicate whether the channel is broken or not. Channel is broken, another pattern has to emerge, and until then it may be bearishness or the consolidation that may be happening. Also make a note that we have the 21,700 previous swing lows that are very close by. A breach of the 21,700 would mean that market is turning bearish from the price action point of view as well. So here a clear M pattern can be seen. On the weekly, it's some shooting star formations are there, which also seems to be getting confirmed. And the market next up could be the first Fibonacci 23 retracement levels from the top. And the correction is so far extended to 4%. The last one, this one. And Banknifty, if you see, it's also going inside a channel now. After the breakout from the cup and cup pattern has gone, and it seems like cup and handle is getting formed, and 20 exponential moving average is lost just like Nifty, and 50 exponential moving average also is lost today just like Nifty, and it has breached the 23.6 Fibonacci retracement, and it is heading towards the 47,000 nearby zones where we have a 38 Fibonacci extension. Fibonacci retracement levels 38.2. You have the 47,055 where you have the 100 exponential moving average also there, and after that it goes to 50 exponential moving average zones at 46,000 nearby, where 200 exponential moving average and 50 Fibonacci retracement, not for extension, 50 Fibonacci retracement levels from the top all-time high of 50,000 nearby would come in. So any breach of tomorrow's candle, if it breaches the bottom of this and then closes below this channel, that would again indicate bearishness. That would mean if 100 exponential moving average also is lost, a close below that would mean that channel is also broken, and the only support that may be left after that would be 200. So that's the trend line channels and the support. So let's see the support resistance levels for the indices first. So Nifty first. So first resistance would come in at 22,360, where the 20 exponential moving average is there. The rounding number 23,500 would have resistance, and after that you have it can find resistance only at 22,800. So major ones is clearing the 22,363 and then 22,500. Remember the 22,000 big rounding number is lost today. 20 and 50 exponential moving average is also lost here. So the first support looks like it may be at 21,800, where the 100 exponential moving average is there, and then you may find support only at 21,700 retest of the single, and breach of that would mean that it can go low as low as 21,500, where some supports can come in. Right, so that's how the levels are there for the Nifty and the Bank Nifty. First resistance would be at the 48,000, and then 48,250 would have the 20 exponential moving average, and 48,200 will also mean that the resistance of the 23 Fibonacci retracement also will be there. And once that 48,000 and 48,250 is cleared, then you have the 48,500, which would be the neckline of that coupon handle. There would be resistance there, and then 49,000 would be where the next resistance would be the big rounding number, and also the previous resistance also. Downside, the first support would upload at 45,055, right? And the same place we have 47, the 100 exponential moving average support also. So 47,000, if it is breached, big rounding number also is breached, then we have supports at 46,500 nearby, 46,400. Then 46,000 is where the major 200 exponential moving average supports would come in. And after that, you would find major support at 45,850 levels, right? Previous breakout zone. So the major supports will be 47,000 and 46,000 for the coming 1 or 2 days. For the next day, it will be 47,000. Right, on resistance we already see, so that's how it looks like. Right, let's come back to the slide and wrap it up. So we are below the 22,000 all of a sudden at 21,957 on a Nifty expiry, weekly expiry day, having made the nearly 4% correction from the last all-time high, which is very close to the 22,800. So we almost close to 900 points of fall that happened just 7 days, and 7 days continuously it has been finding it difficult to stay on top, and then selling pressure was there. So today's fall is pick 345, wide range bearish candles, 1.5% gone. On the Nifty and Bank Nifty, did not lose that much, it's more, nearly 1%, a little more, but more than 500 points lost in Bank Nifty. And the selling pressure is seen there as well with wide range bearish candle, and then it has also fallen below the 48,000 and 47,500 as well. Right, 20 and the 50 exponential moving average is lost on Bank Nifty and Nifty as well. 20 and 50 exponential moving average is lost. So levels we've already seen. I'm not repeating that. So if you try to put it factors which are in favor of the bulls and the bears, you can see that the higher lows still maintained in both analysis. It is positive. Sectoral indices are red today, but still falls in the bulls bucket because momentum and is still remaining bullish and sideways on most of it except for the IT. Most of the top 5 sectoral indices still have either sideways or slightly bullish momentum through the short term we are talking about. Now heavyweight stocks were all deep red today, deep red, right? More than 2% kind of fall. That's what is happening, except for the Nifty, which is showing some green, but still appears in the bull bucket is because of the fact that it's still momentum in the short term is sideways or bullish, and only the HDFC and the Reliance appear to be in the bear zones in the short term as of now on the daily charts. The crude oil is showing some green, but still appears in the bull bucket because of the fact that there's a pool of 12% nearby, and it's fallen. It's still below the 80. Remember, it was in the top of the trendline channel above 85 kind of thing, but it was kind of a threat for a oil importing country like ours. And US index is a green, showing some green. 4 to 7% of reversal is happening from the bottom after 6 to 8% of retracement had earlier done from the peak rally on Nasdaq, S&P 500, and the Dow Jones indices. So that means that would mean that the model market is green, and we are going against the model market to give some hope for the bulls that eventually it may find support close by. Now, what goes more in favor of bears? More items are in favor of the bears today. So we have a double top pattern, price pattern, candlesticks of wide range bearish. Weekly, tomorrow is a weekly end, and it's a shooting star that formation and confirmed on both analysis. Trendline channel bottom is reached almost and breach of that. These are all patterns in the price section, and the gap still which are bearish in nature. Now 20 exponential moving average and 50 exponential both are lost on both indices now. The bands are no longer sideways, indicating expansion the downside in both indices with a bearish bias, which is again negative. Double top band pattern can be seen on both indices. Right? We're seeing that now momentum is dipped into bear zones, not sideways. Momentum is sideways. Nifty and it's, if you see the momentum, you can see in the Banknifty it is sideways. Okay, and so let me just put that, and bearish zones on Nifty. So momentum is bearish zones on Nifty. So it's no longer sideways, it's double. ADX is the trend indicator, and that is also crossed over to the bear zones long back end. Both indices, short-term trend is bearish, short-term momentum is also bearish now. Banknifty is holding on a little bit, but it's sideways and heading towards the breach of our side below 40, heading towards that. Banknifty slightly better momentum as compared to that's one, but it falls in the bucket of bears. Now, what is the very unusual thing? Not very unusual. What is the more noticeable thing in the market is that India VIX suddenly started spiking, and it is 60% per spike, and it's at 18.2, 60. It's not 55 anymore. So it's a week's time, and you have 60 plus. 60 plus is the kind of India volatility fear and greed index that's seen. It has become 5,000 and about 15. So that indicates the election uncertainty or outcomes until that is out, or until the election outcomes there. This could keep on rising. That's what the fear and greed is meant for. But that way, the option sellers might find slightly favorable with regard to the premiums and all that. IV percent and IV RV spread is all better now. But you have to be extremely cautious because of the fact that it is heading towards 20, and market can be very choppy and can wipe out a gap in a matter of minutes or seconds. So be very careful, stay out of the market until the elections are over, especially the option traders and if you're a novice. Dollar is again rising up, rounding pattern breakout, and it's 105.67, and rupee remained to be weak over the 83 being managed by the central bank. Gold is also very close to the all-time high. It's showing green. Some cool offers happened, but not too far from the all-time high. Gives us the worry that equity market is getting shifted elsewhere or not. Fyers have been heavy sellers, and yesterday, can you believe that it is sold 6,700 crores in the cash market, and today also it might be very good selling that might have happened from the Fyers. So theirs had been pumping the money, but that's not meeting, is why the market is falling. Right? So all institutions have money has to flow in for the market to stay afloat. Unless so that's why we are falling down. Institutions are selling big heavyweight stocks where the sell-off is happening. You can clearly see that because deep right across all the heavyweight stocks that contribute maximum to index. And that's it. So the bears have a big edge or a big advantage over the bulls today, and all in the coming days as well. You don't know. Yep, today, just to conclude, market got caught in a big sell-off today. Once again, after last Friday's big sell-off, today it is more than 300 points, a big sell-off, 1.5% more gone, and it is volatility is rising up like anything towards 18.2, heading towards 20 above. Is clearly dangerous and choppy, especially in the option derivative trading. It has just landing down for the last 7 days and clearly turned bearish with wide range bearish candles. Correction is now extending to 4 to 5% now, but from the last retracement from the all-time highs, and momentum trend and all that is getting lost, and higher low patterns could get breached any time when the bands are expanding on the downside, no longer sideways. Potential bear patterns on the weekly shooting stars, double top and all that is emerged when momentum is falling to negative zones, especially in Nifty. So these may be opportunities for the investors to do a long-term quality investments in 50 kind of stocks, and or try for rental from the different option strategies if you're already invested. Check out the playlist for it. But the trade is what is called as direction, and the direction may be evolving once the Banknifty also moves below the RSI 40. Hope for that to happen tomorrow, and you can have short trade. But it will take spreads rather than naked shorts or shorts with stop loss. Better than that, you can again have spreads. Daily spreads are bullish. Put spreads, all those things. Check out the playlist for those. So market may be looking for supports. It may or may not get it, we never know. But if the patterns in the price action is breached and the 100 exponential moving average goes, and 200 slowly gets breached on both the indices, correction could extend from 5 to 10 in a matter of days. Or if there is a black channel, it will not happen in a day. Right. So all is fine as long as the higher low pattern is not breached and the moment it does not slip to the other zones on both the indices completely. And until then, try for directional short and long trades if there is confirmation that comes from the downside. And if market remains there, go for down directional spreads. Understanding the put side risk that is there involved. So manage your portfolio level risk and portion level risk. That's the only thing that in our hands. Election and poll weeks is rising up. Election exit outcomes. Poll outcomes, all that is coming in there. We stay out of the trade if you're a novice or a beginner. Yeah, it's dangerous to trade major events. Mix is spiking, is clearly shouting at us, stay out. If you still want to be in the game, stay out. Right? And if you're a professional trader, then manage your risk is all that is in your hands for you to be there in the trade for the next day. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.